What's up, everybody? It's your boy Deonte Burden, aka Mr. Short Dog himself. We'll be discussing the S Corp, which is a subchapter of S Corp. We explain it, talk about it from an operational standpoint, and also from a taxation standpoint. I want to give you guys a quick disclaimer. I will say that regardless what entity you want to set up, be it the S Corp, C Corp, LLC, make sure you have a conversation with some credentialed professional, i.e., a business attorney, tax accountant, to give you the best insight and advice in regards to what entity you need to set up from a business aspiration standpoint, and also that someone that can assess your personal situation to give you the best guidance possible. With that said, we're talking again about the S Corp, which is subchapter S corporations. Members are not personally liable for the company's debt. It's considered a pass-through entity where actually the actual entity doesn't pay tax or receive a refund, but everything flows through and goes to the actual owners of the company, and it was reported from that way. How it's created. You subchapter S, the articles of organization are filed with respect to Secretary of State's office. Procedures and filing fees may vary from that. From that point, once it's incorporated, the IRS, Form IRS 2553, election by a small business corporation has to be filed. If that, or once that's recognized and received by the IRS, then you'll be able to tax as a subchapter S corporation or recognize a subchapter S corporation. Some of the key features is that you have limited liability, no federal tax at the corporate level. You can have no more than 100 shareholders. I'm sorry. Shareholders must be private individuals. Again, it's recognized as a flow-through taxation. Profit and loss are distributed to shareholders. Tax implications. We see right here on this grid, you see this S corporation. One of the key things, guys, we'll go into depth about this. You need to have somebody receiving a reasonable salary. What we mean by reasonable salary, they have to have a W-2 employee. There are a lot of videos on the internet talking about S Corps, and they're saying how much money you can save in taxes with an S Corp. Theoretically, you can, because the S Corp, when it flows through to the particular owners, that distribution is only recognized at a federal tax level. The reason being that there was supposed to have been someone that was employed by the S Corp that paid payroll taxes, that paid those actual self-employment, i.e. your FICA or Social Security and Medicare. So that's why the net income doesn't have to be taxed for that when it flows to the owners. But remember, this key thing right here, it has to be a reasonable salary. And for the most part, we have a lot of S Corps that don't even have a salary at all. So remember, it has to be reasonable. Profit is distributed, tax saving outweigh the cost. They got to meet IRS requirements. Okay, let me get back in one a little too fast. So let me your basic comparison: LLC versus S Corp. Default LLC owners pay FICA, again, that's Social Security, Medicare, on incomes, on any point, any profit and distributions. And S Corp only pays FICA, with a wage during that. That means the Social Security, Medicare is paid whoever that employee or whoever's getting that wage by the S Corp. The distribution are only taxed at the federal level, okay? By federal taxes, right? When I say federal level, I'm sorry. Here's a quick example of it, guys. We're looking at an LLC from perspective of just say two people making $20,000. You'll see right here, LLC sales 40,000, other expenses 20. That's your business income. A distribution is leaving from the LLC, going to the actual person's personal return. That's subject to the self-employment taxes and also the federal taxes, and that's how much you'll pay in taxes. This is with an LLC with an 18.3% effective rate. With an S Corp, in essence, $40,000 in sales, reasonable wage. It's just, we're talking about which is $10,000. Renee, keyword is reason. It has to be a reasonable wage. You can't get away from that. You can't just turn around and say you're paying somebody $500. Okay, we don't want to pull in the red flags and everything. That's actually, there's no actual number or percentage or formula that was given in regards to what determines a reasonable wage. But guys, you just have to kind of have some I don't even want to say the word common sense, but just some insight to find out. And I would actually lean on maybe talk some kind of accountant or tax professional to give you some advice on this if you're not for sure. Okay. You see your other deductible expenses, which yielded you a business income of $10,000, which is $10,000 less than the $20,000 here. You got the distribution that was given out to the owners. That be via the K1, whatever. Wages and salaries, that $10,000 that the person has. So yeah, like I said, that net income of $20,000. You see that, right? See that $20,000 right here. When we're looking at it, when it goes to the actual owners of it, that is only subject that only subject to the self-employment tax, which would be on the $10,000. I'm sorry, which would be $1,413. Federal income tax $894. So you see right here, instead of getting taxed on $20,000, that was just a $10,000 distribution, and you have a total tax of $2,307 with an effective rate of 11.5%. The key thing, like you said before, you're only going to pay, you're only going to be subject to less taxes dealing with an S Corp, but you got to make sure somebody's getting a reasonable wage in there, okay? So in theory, you will pay less in tax with an S Corp, but you have to have some W-2 employee with that. Again, I can't stress this enough. You must have a W-2 employee. The issue comes up with having a W-2 employee. I will say this, guys, if you know from the operational standpoint, you're going to have issues from a compliance standpoint as far as paying wages, reporting those quarterly 941, which is quarterly federal payroll taxes, unemployment tax, and state income taxes. I don't necessarily know if it'd be the wisest thing to do is try to have you an S Corp if you know you're going to have compliance issues with reporting those particular things. But I'm just letting you know what you are subject to have in order to keep your S Corp in compliance. With the tax filing, the S Corp's tax filing is filed on a Form 1120-S. Again, it's a flow-through entity, so it wouldn't get a refund, it wouldn't pay any taxes. And each shareholder is given a Schedule K1, which reports their respective distribution of the profit and loss of the particular company they give. That information is taken to the actual the shareholder's personal return reported on the Schedule E, and that's when it's determined if that profit or loss is subject to federal taxes from there, okay? Again, guys, I am Deonte Burden, aka Mr. Short Dollar himself. Hope you enjoyed that quick explanation of S Corp that we went over. You need to go to the Mr. Short Dollar YouTube channel where we talk about personal finance, entrepreneurship, real estate investing, and business. We have over 700 videos on the YouTube channel covering everything from personal business operations, business management, and business finance. To take advantage of great information like we just discussed and more information coming down the pipe, hit that $ in the bottom right-hand corner to subscribe to the channel. And also make sure you hit the bell to get a notification each time we upload a new video. Best of luck to you guys. Take care, and I will talk with you soon.